Hi there, good afternoon. You tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Shrishti Sharma. Very good afternoon to you, Shrishti. And if you look at the markets right now, they're actually trying to rather regain its mojo. If you look at Nifty, it has actually surpassed the 19,600 mark as well in today's trading session. That's on an intraday basis. If you look at Nifty Bank, healthy set of recovery coming in for Nifty Bank as well, because if you look at Nifty Bank, at one point in time it was underperforming the benchmark indices. It was in the negative territory, but there you can see a sharp spike in the Nifty Bank. Right now it is actually trading higher by about 0.2%. Broader markets also actually moving in tandem with the benchmarks. As of now, 0.3% uptick coming in for broader markets as well. Talking about the sectoral indices, then you have Pharma Index that's seeing gains of about 1.3%, top sectoral gainer. IT Index is also seeing good gains of about %. Realty also is reclaimed. Is mojo, looks like a 0.6% uptick coming in for Realty Index. And among the losing end, it's only the PSU Bank Index that's in the negative territory. 0.3% downtick come in for PSU Bank as we speak. So that's the way how the markets are looking like at this point in time. Shrishti, if you look at the benchmark indices in the positive territory with IT as well as Pharma in the lead in today's trading session.
Okay, so that's how the markets are panning out right now. We're on to the Market Fatafat show. Let's kickstart the show and let's tell you all the stocks that are buzzing in trade right now, either on the back of the technicals or on the back of the news flow. And before that, let me welcome on board onto the technical. We have Amar Singh from Angel One, and from the team of researchers, we have Ankita as well as Ashesha joining us. So good afternoon to all of you, and let me kickstart taking the first stock and highlighting Britannia, because this is the counter in Nifty 50 that's seeing the most of the drag, and that's after its Q1 earnings, where disappointment coming in on broadly all the parameters, and other than that, even the volume growth wasn't that great to support the sentiment. If we talk about the numbers this time, then onto the net profit figure, there has been a jump of 36% on a YOY basis. The margins have seen a jump of 364 basis point on a YOY basis, but look at the volume growth that has come in at 3%. That's expected to be in a low single digit, and the volume growth has been registered at that front. The revenue growth is 9%, including the transition growth of 9% is what the company highlighted onto the con call. But where the weakness has come in, where they say that the Rusk, which contributes a reasonable amount to the top line, have seen increased competition, especially in the north side of the markets. The markets are literally sluggish currently versus in the past, and what they're highlighting is that the traditional markets, both in the rural and the urban, the sentiment out there is sluggish right now, and going forward that could take some time for the growth to come back. So the commentary from Britannia management wasn't that great to push the stock higher, and that's why we are seeing a cut of more than 3% currently.
All right, that's Britannia for you, top loser on the Nifty in today's trading session. Let's talk about Ircon International, and that one is actually buzzing in today's trading session. Not just Ircon International, all the stocks related to construction and services for the railways is actually buzzing in today's trading session. And this because you had the announcement coming in from government that they are going to be redeveloping more than 500 railway stations. So Prime Minister Narendra Modi on Sunday actually rolled out a plan to spend about 24,470 odd crore rupees, and this order in order to provide modern passenger amenities. And on back of that, you have Ircon International that's soaring in trade. Add to that list, you have RVNL, RITES, NCC, as well as L&T also seeing good gains in today's trading session. So keep an eye out on all of these companies which are related to railway constructions and services.
Okay, moving on, and then as the markets are at a day's highest point, look at the move in the IT counters. And Amar, coming to you for next one, Tech Mahindra is the counter that is on your radar. Tell us what are the charts, how the charts looking like, and next levels for this one.
Yeah, a very good afternoon for having me. Talking about Tech Mahindra, what we saw in this stock is that the stock witnessed some correction from almost 1200, 1250 levels to 1100 levels. Currently it's trading around 1190, and what we are seeing is that the stock is very close to breaking a crucial zone of resistance. So that's somewhere around the 1200 mark. So sustaining over the 1200 mark, the stock has a potential to reach towards 1260, 1270 levels. Technically, if you ask me, the medium term and the long term trend for the stock remains positive. And for any further rally, the stock needs to sustain over the 1200, 1210 mark.
All right, so that's the view coming in on Tech Mahindra. But remember that we've been seeing a slew of IPOs, new listing on the bourses. We also have another candidate which is all set to hit the market, and that is TVS Supply Chain Solutions. And we have the management of TVS Supply Chains joining us on the show. We have Mr. R. Dinesh, who's the Executive Vice Chairman, and Mr. Ravi Vishwanathan, who is the Managing Director of at TVS Supply Chain Solutions. Very good afternoon. Thank you so much, gentlemen, for joining us on ET Now. This is Cheryl on the other side, and if you could actually dive in and dwell in more about your company, if you could talk to us about your business model and what is TVS Supply Chain into.
So TVS Supply Chain is an Indian multinational which is actually with a focus on the customer and the capability. We had acquired companies in the developed markets for making sure we develop the capability to be able to service and give solutions for our customers. And that's the core and the basis on which this business has been built, with a focus on the 3 C's: the customer, the capability, and the country.
Okay, the next question, Ravi, if you can take this up, because earlier the fresh issue was around 2,000 crore rupees, which has now been slashed to 60 crores, and also there has been a cut in the OFS portion, which back in earlier was 1.42 crores shares from 5, and that has been cut to 5.9 crore shares. Is this because of the valuation concerns, and what are the reasons behind this change?
Yeah, good afternoon, Cheryl. So let me first take off from where Dinesh spoke about. This is a company which is focused on providing, supply chain solutions to very large Fortune 500 customers. We have over 72 customers as of FY23. The IPO that we have filed is for 600 crores of primary and about 1.43 crores shares of secondary. And we have raised capital in between at about 417 crores. So overall, if you look at it, I think our capital raise plus the capital that we have raised outside of the IPO is over 1,000 crores of primary.
Right. Let's talk about the objective of the fresh issue. I believe that is for the repayment of debt. So if you could tell us what will be your debt position after this, and also what will be the annual interest cost savings due to the repayment?
Fantastic. So I think, one of the things that we want to achieve is to reduce all our external debt borrowing. And what it does is really give us the headroom for growth. So that we are only looking at borrowing working capital as we go forward. And that is really something which is very critical for us, because we engage with large Fortune 500 customers, and the IPO really helps in positioning the brand. It's the transparency of the financials and the governance which comes into play. So I would say the IPO will help on debt reduction and create headroom for us to grow. And second is the visibility of the brand and the transparency of all of the accounts and the governance that comes along with it, which will help us win customers going forward.
Okay, Dinesh, if I can come to you, and wanted to ask you on the financial front, because there has been a turnaround in the past 2 to 3 years, if we see, because back in FY21 and 22, the TVS Supply Chain Mobility was actually incurring loss, and from that, the company has turned profitable. What could be attributed to this change, as well as going ahead? How do you see the profitability sustaining at these levels or even growing?
See, as you mentioned, I think if you look at from 21 to 23, our revenues have grown significantly. Our EBITDA has also grown significantly, and therefore the PBT is also reflected there. Our focus is on in the past, the focus has been on making sure that all 3 parameters are looked at, and that's how we see the business.
Right. Let me then dwell in more and let's talk more on the numbers then. Your margins have been hovering around in the 5 to 6% range. Is there any scope for us to see margin expansion, at least going ahead, at least how the next 2 quarters are panning out for your company?
So let me take that question, Cheryl. One is that if you look at our numbers in FY20, our EBITDA numbers were about 243 crores, and we have expanded that to about 683 crores by FY23. On the back of a very solid revenue performance too, when we closed FY23 at 10,235 crores. And like you rightly said, the company has turned a corner and we have delivered about 41 crores of PAT. You did ask me in the previous question what will be the debt repayment and what impact it will have on the interest payment. We believe that will be about 107 crores impact on once we repay the debt, the interest reduction would be about 107 crores, which is what we have currently in our FY23 numbers.
Okay, gentlemen, we'll let you go on that. Thank you so much, Ravi and Dinesh, for joining us today on ET Now, and wishing you all the best for the upcoming IPO. But with this, viewers, let's move on and once again get back to highlighting all the stocks that are buzzing right now. And Amar, coming to you for the next one. Pharma is also having a good day indeed, and from the pack you have picked up Jubilant Pharma. Tell us how the chart's looking like for this one.
I would say that Jubilant Pharma, we are seeing some sort of positive movement today, and the stock was in for some consolidation because it was unable to breach earlier the 370, 380 mark. So currently it's trading above that level, around close to 393 odd levels. But for any significant rally, the stock needs to sustain above the 420, 430 levels, because that's a previous stock which the stock had made. So that's a level that needs to be clearly watched out for. But as far as the trend is concerned, the trend remains positive on the medium term and the long term charts. But as I said, 418, 420, that's going to act as a zone of resistance. If that is taken out, then the stock can rally towards 450 levels.
All right, moving on then, let's talk about Venkys India. And Ankita, this one is definitely under pressure in today's trading session. It came out with its numbers a short while ago. How are the numbers?
Well, yes, Cheryl, as you mentioned, the stock is under a lot of pressure and it is down almost 13% in trade right now. The numbers came out as of today and the numbers don't look very good. In fact, it is a weak set of numbers. The revenues are down good 18% on a year-on-year basis, have come to 976 crores versus 1,096 crores the previous year. The EBITDA is also down 56% on a year-on-year basis. The margins have contracted a good 279 basis points on a year-on-year basis, and the net profits are also down 60% on a year-on-year basis. Now, if you look at the profit margins of the poultry and the poultry product segments for the quarter, they have been affected, due to lower realizations from sales of all-day, one-day chicks and grown-up birds. The oilseed segment has also registered lower sales and profits. Its margins have also been affected on account of lower realizations from the sales of finished goods, that is de-oiled cakes and oil. However, the performance for the animal health product segment has been good, but largely a weak set of numbers, and that is clearly having a bearing on the stock price right now.
Well, yes, absolutely. That's down in trade right now. But moving on, and Amar, one more IT name on your radar, and that is Cyan, because this particular stock has seen its 52-week high levels today, near to that all-time high levels. Tell us, how much more upside are you looking in this one?
So I would say that looking at the stock, once the stock started taking off from the 800, 900 zone, because earlier that was acting as a crucial zone of resistance. And also, if we look recently, so somewhere around 1500 odd levels, that was a zone of resistance, because that was the top that the stock had made around 1530 in the first week of July. So the stock has taken out and the stock is currently trading around 1620 odd levels. If you ask me on the long-term charts, on the monthly charts, or even the medium-term charts, the stock continues to display very strong bullish momentum. So on the upside, the stock could rally towards the 1670, 1680 levels in the short term. And as far as support goes, the stock now has got a strong support coming around the 1500, 1520 zone, which was earlier acting as a zone of resistance for the stock.
All right, let's talk about Paras Defense, because with this particular counter actually just reported his earnings, and if you look at the numbers coming in on a standalone basis, The revenue has come in higher by about 9.8%, coming at around 45 crore rupees. But apart from the revenue, rest all the parameters have been quite disappointing coming in for Power and Defense, and that's why you can see that drop in the stock price as well. If you look at the profit, it's coming lower by about 17.3% on a year-on-year basis, and the profit number is coming at around 6.2 crore rupees. This against 7.5 crore rupees that they posted a year ago. If you look at the EBITDA margin, a sharp contraction coming in the EBITDA margin level as well. The EBITDA margin is at around 22.2% as compared to 29.3% a year ago. So yes, the numbers have come in weak when you compare it on a year-on-year basis, and that's one of the reasons why Power Defense stock is actually declining in trade. Right now, it is trading lower by about 1.7 odd percent.
Okay, moving on to the next stock then, and the newsmaker for today, that is Paytm. Ashesha, tell us what exactly the news has come in Paytm and why such seller gains today.
Well, yes, Vijay Shekhar Sharma is going to buy additional 10% stake in the company, because of which the stock is soaring in trade today. In fact, 6.6% higher in trade as we speak. This stake will be bought from Antfin, and Vijay Shekhar Sharma's shareholding in the company as a result of this transaction will increase to 19.4% from the current shareholding of about 9.1%. Antfin, meanwhile, will cease to be the largest shareholder of the company, and their shareholding will shrink from 23.8%. It will come down to 13.8%. Existing board will continue to be as it is. Vijay Shekhar Sharma will continue to be the MD and CEO of the company. But this is a big positive, because Antfin's shareholding stake sale overhang is now out of the way, and SoftBank stake sale, meanwhile, overhang continues. So that could be a bit of a dampener. But for now, the street is rejoicing the news that has come in. The stock, as we speak, 6.5% higher in trade.
All right, that is Paytm. Indeed, the newsmaker of the day, 6.5% uptick coming in for that particular counter. But Amar, coming to you, and there's another counter that's actually seeing good strength in today's trading session, and that is DVs Laboratories. It is among the top gainers on the Nifty today. If you can see this last 6 months, the stock has actually silently and very slowly, stealthily moved 38%. Where do you see DVs Laboratories headed from here on?
Yeah, I would say that the stock, you rightly said that it's been on an up move very steadily, and for the last couple of days, the stock has really taken off. And what we're seeing right now is that the stock has reached a crucial zone of resistance, which was earlier 3750, 3800 levels. So taking that out, and that also because if we go back, so in the first week of July, it had made a high of 3775, and then again it had retested those same highs somewhere in the last week of July, but it was unable to breach that level. Now what we are seeing is that the stock has decisively breached that 3750, 3800 zone. And also looking at the medium term trend on the weekly charts, the momentum is there to stay, and the stock has also now found very strong support at lower levels. So 3700, 3750 is going to act as a very strong base. So the stock has the potential to rally towards the 3950-4000 levels in the short term.
All right, moving on then, let's talk about Balrampur Chini, and this particular counter is moving on back of its numbers. If you look at the consolidated numbers coming in for Balrampur Chini, it was a good set of numbers. If you look at the revenue, saw an uptick of about 28% on a year-on-year basis. The EBITDA operating profit also saw a good uptick. If you look at net profit, it came in at around 73 crore rupees as against 12 crore rupees a year ago, and the EBITDA margin of around 760 basis point uptick coming in for that particular figure as well. 11.7 is where the EBITDA margin stood at. But however, if you can look at the stock price after the initial uptick that it saw in the trading session, right now it's given up all of its gain, trading in the negative territory. It's down about 1%. And remember, sugar is definitely a cyclical business, and also you have that news piece on ethanol prices as well. So that also is kind of impacting Balrampur Chini in today's trading session.
Okay, moving on, and let's shift focus to Mrs. Bector Foods now. This time the company has reported its numbers, which was indeed a good set coming in, where the company has registered, like you can see, the stock is holding up a gains of around 4% currently, and that's on the back of the earnings, where the revenue has grown in by 24% on a YY basis. The EBITDA has grown 85% on a YY basis and coming at 58 8 crores, and the net profit has seen a jump of 2.7 times, and the figure is close to 35 crores with a margin improvement of 507 basis points. Across all the parameters, we are seeing great set of numbers coming in from Mrs. Vectors. Other than that, the stock is seen to be hitting its all-time high levels, almost touches that 1,000 rupees per share mark, but now seen to be drifting lower from the day's highest point. But look at the volume. Today's volume do say that the volumes are over 2.3 times its 10-day average trading volume, and on the back of all these technical as well as fundamental aspects, Mrs. Vectors is still holding gains of around 4%.
All right, that is Mrs. Vectors for you. But Amar, coming to you on Intellect Design, how is this particular counter looking on the charts? A similar chart compared to Science is what you're seeing?
Yeah, I would say that technically the stock has pulled back, but for any further rally, the stock needs to sustain above the 715-720 zone. Because what we saw is that on the 28th of July, the stock witnessed a significant move, and also on the back of very strong volume. So that really shows that there is some interest which has come in the stock at higher levels. So now effectively it means is that on the downside, the stock has got very strong support coming around the 640-650 zone. But for any significant rally, the stock needs to sustain over the 715-720 zone. So once the stock starts trading over the 715-720 zone, then the stock has a potential to rally towards the 800 levels in the short term. And technically speaking, on the long term as well as the intermediate term trend for the stock remains extremely strong.
Okay, moving on then, and let's shift focus to the top gainer in Nifty 50 today, and that is M&M. On the back of the earnings post the con call, we have seen brokerages coming out with a positive notes, and that's why the stock is seeing the gains of over 3.5%. Ankita, tell us, how are the brokerages seeing M&M right now, and what were the key takeaways?
That's correct, Shrishti. It is on the back of brokerage notes that are coming in. Very positive sentiment amongst the brokerage notes. First up is Nomura, that has maintained a buy and hiked the target price to 1,978 rupees per share from 1,790 rupees per share. Now, according to them, the Q1 results were slightly better than expected, and also the lower other expenses have offset the higher raw material costs. They also believe that the investment in RBL has a strategic objective, and it is likely to be positive, and they see strong commitment to capital discipline that will continue with M&M, and also they see strong SUV growth outlook, and they maintain M&M as the top pick. And on the back of that, we do see an uptick coming in the stock. It's up more than 3.5% in trade as of now.
All right, so that is the take coming in for M&M. I know that Shrishti was itching to speak more on M&M, but then she realizes not her stock and this Ankita's stock to talk about M&M. But Amar, let's talk about Ridus Off then, and you have till 1 minute to tell us why this one is making it to your list today.
I would say that Ridus Off technically is very strong on the charts, and also what we're seeing on the intermediate term trend, the momentum continues to build up. And the stock is inching higher, and if I look at the key zone of resistance, the next zone of resistance for the stock, so that's somewhere around the 480-500 zone. So the stock effectively means that the stock has the potential to rally towards 480-500 levels, and also as recent as 27th July and 28th July, we saw heavy volumes in this particular counter. So that really shows that there's a lot of money which has moved into the stock, and the stock is, since technically also on the long-term charts also is looking very strong, so the stock has a potential to rally towards the 480-500 zone in the short term.
Okay, another IT counter, that is Zen Technologies, is also in focus. Ashisha, tell us, why is that so?
Well, yes, on the back of its results and very strong set of numbers, the stock, as you can see, is locked in upper circuit of 10%. Revenues for the quarter gone by stood at 132 crores versus just 37 crores of revenue that the company reported same time last year. Across all parameters, the numbers look very strong. Margins have also expanded. Company reported EBITDA margins of 52% versus margins of just 29.1% that the company reported same time last year. Profitability, meanwhile, has also come in strong. Net profit stood at 47 crores versus a profit of just 7.5 crores same time last year. So across all parameters, very strong set of numbers. The stock is locked in upper circuit of 10%.
All right, that's Zen Tech that is locked in the upper circuit of about 10% in today's trading session. A lot of activity also taking place around that particular counter. But Amar, coming to you, PI Industries, why is this making to your list? Is it a buy? Because if you look at the way how the stock has performed, only 19% uptick in the last 6 months.
Yeah, you're right, because what we're seeing in this particular counter is more or less consolidation, because the stock did rally towards the 4,000 levels and then corrected towards 3,500, and now it's around 3,750, 3,760. It shows that there's some sort of bullish momentum on the stocks in this particular counter, but at the same time that momentum seems to be somewhat tapering off. So for any further rally in the stock needs to sustain above the 3,800 zone. So currently it's around 3,770. So sustaining over the 3,800 zone, then the stock has a potential to rally towards its previous top of 4,000. So one should ideally wait for the 3,800 level to be reached before taking any fresh positions.
All right, so that's PI Industries for you. But on that note, we'll actually slip into a break on this edition of Market Fatafat. When we come back, lots of stock to discuss. So viewers, don't go anywhere.